The U.S. economy grew at its slowest pace in nearly 2 years the first 3 months of 2024. A surge in imports and small build-up of unsold goods at businesses, all this together with an acceleration in inflation that reinforced expectations that the Federal Reserve would not cut rates before September. GDP increased at a 1.6% rate last quarter, the slowest pace since the second quarter of 2022. The economy grew at 3.4% rate in the fourth quarter. The first quarter growth pace was below what U.S. Central Bank had regarded as the non-inflationary growth rate of 1.8%. Excluding inventories, government spending and trade, the economy grew at a 3.1% rate after expanding at a 3.3% rate in the fourth quarter. Trade and inventories are the most volatile GDP components, and they are often subject to revision when the government updates its growth estimates. Now, the cooler than expected growth also reflected a downshift in government spending. Domestic demand was strong as consumer spending moderated slightly, while business investment picked up and the housing recovery gained steam. Well, here's what U.S. Treasury Secretary Janet Yellen said on the latest economic data. Take a listen.
I think I still see in the underlying core drivers of economic activity considerable strength. So I think that the U.S. economy continues to perform very, very well. And I think, to me, that was evident. The headline figure was off a little bit, but for reasons that are peculiar and not really indicative of underlying strength.
Well, price pressures heated up by the most in a year, with a measure of inflation increasing at a 3.1% rate after rising at a 1.9% pace in the October-December quarter. The personal consumption expenditures price index, excluding food and energy, surged at a 3.7% rate after increasing at a 2.0% pace in the fourth quarter. The price index is one of the inflation measures tracked by the Fed for its 2% target. Inflation was strengthened by increases in the cost of transportation, insurance and housing, which offset a decline in goods prices such as motor vehicles and the parts. The weak GDP growth and increasing price pressures will have an impact on the Fed's decision to cut rates. The Fed has kept its benchmark overnight rate in the 5.25% to 5.50% range since July. It has raised the policy rate by 525 basis points since March of 2022. Officials are expected to leave the rates unchanged at the U.S. Central Bank's policy meeting next week.